What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Ferd Niemann. Is it Niemann? Is that the vowel sound that you use there?
That's right.
All right, excellent. And how are you doing today, Ferd?
Hey, doing well. Thanks, Dan. Appreciate it.
Excellent, excellent. And I'm really stoked today because I don't know if you know this, but my very favorite audience member is watching here today. And why is my favorite audience member watching? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, all that kind of stuff. And why do I do that? Well, part of it is for legal compliance. A lot of the deals that you end up finding in commercial real estate, they are private deals. You're not allowed to advertise them, anything like that. And the only way you can get involved is if you have a prior substantive relationship that's documented. So that's part of what we're doing. You got to know if there's overlap between you and the other people in your circle. So I have them on and I find out what exactly is it you do. But before we get too excited with that, Ferd, do you want to introduce yourself a little bit?
Sure. Yeah, like you said, Ferd Niemann. I'm a real estate attorney. Do everything from corporate transactions, contracts, leases, title survey. We do syndications, closings, bank docs, finance. Also, a mobile home park owner operator. Bought about 20 parks, 1,500 pads. Operate in the Midwest. From an operator standpoint, on the law side, we have over 125 clients nationwide, and we're based out of Kansas City. And just love being involved in everything real estate.
Excellent, excellent, beautiful. And so the first part that I like to go through is the five distinct motivations. But before that, Ferd, I don't know if you can see through the camera and into the audience's device, and then under here, like, but wait, check your eight. It's actually the audience's five. Down there, you might be able to see if they have the ugly red subscribe button or if they have the beautiful gray. So, okay, that's a joke and it's not that funny. Anyway, let's go to the motivations. I found that there are five distinct motivations as far as why people go through the effort, anxiety, roller coaster ride of making commercial acquisitions. And I found that it's important to go through each of these so you know what is really getting people to follow through with it. So the first reason why some people make acquisitions, if they already have a portfolio of assets and the cash flow from owning it is how they make their ends meet, the only reason why they're going to make another acquisition is if inflation is rearing its ugly head or there's some sort of asset crash going on, and so you can pick up properties on the cheap. So that is what some people are up to, but I'm not in that category personally. What I'm up to, because I got a background in tech, I've had a CRM agency since 2011 after working for web.com. And the thing is, I started into real estate back in 2014, but really I was going like, well, there's got to be a way where instead of paying basically half of everything I make in income tax, I should be able to pivot into something where I'm getting rewarded in the form of deployed equity, aka capital. And that's what I'm up to, just because of its tax advantage status. So that's why I'm involved in all this. But a lot of people are attracted to commercial real estate because they want to either leave the door open for their retirement or they want to fast track it. Really, that means, they want to work a little bit less. Maybe it means fewer months per year. Maybe it means fewer weeks per month. Who knows? But regardless, that's what many people are attracted to in this. But it's not everybody. Some people are super duper ambitious and they want to buy their entire hometown. They were after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to be hustling into their 90s and why they make great teammates when you're making these acquisitions. But the last motivation I found, some people, they're still going to be hustling into their 90s, but the reason why they're doing it is a little bit different. Perhaps they've found a sector of society that they want to support, or maybe it's the environment, or maybe it's animals, or like whatever it is, sending people to space. But if you want to make a really big impact, you got to have your financial situation all buttoned up, and it has to be pretty substantial. So that's why some people are making these acquisitions. So of those five different motivations, Ferd, what describes you best? What combination of those five is really you?
I'd say, it's a little bit of everything, but I'd say earlier in my career, I would have been more buy my whole town. But at this point, I'd say I, kind of drop some of that ambition, look more work-life balance, which is a regular struggle. So I'd say trade time for wealth is a big one. I mean, real estate, I used to have a business partner that said real estate is not a get rich quick scheme, but it's a get rich slow scheme, and it'll work. If you do it, it'll get rich. I used to do single family duplexes, buying whole flips, but then I realized that was the get rich slow. I found out mobile home parks were kind of a get rich medium speed. It's not an overnight success by any means, but there's the scale and the efficiencies, and obviously the tax status from depreciation, cost segregation. As a real estate professional, all that you're well aware of. It's just so much easier to stack uh, benefits and variables in real estate than other areas, and gain wealth and passive income, but also active income. So.
I love that answer. It's fantastic. And it brings me right into the next part, which is about risk. One of the things I need to make sure of in this show when I have these guests is I need to find out, it's like, okay, did you just hear that there's money in commercial real estate and that's why you're here, and you haven't really let it sink in that there's risk involved? So I try to have fun with it with this kind of tongue-in-cheek question, but can you please fill in this blank? There are many popular investment asset classes, but I think blank is too risky. What's too risky in your mind, Ferd?
I think anything that's speculative is, it's gambling, for example. I mean, if you're speculating on, buy low, sell high, but there's no underlying core assets. When you look at the old tulip bulb trade, I read an article the other day. I think it was from Howard Marks talking about, these sardines and, the $10,000 for a can of sardines. Like, well, who would eat $10,000 sardines? And he's like, well, these aren't eating sardines. These are trading sardines. Well, they didn't have any underlying value. It was just speculative, looking for the greater fool theory. So anyway, I think anything that requires a greater fool than you would be something that'd be too risky.
Yeah, I love it. I've never heard of $10,000 sardines. That's really, really something. But maybe that just means that I should stick to commercial real estate. And speaking of sticking to commercial real estate, in every episode of Dan Does Deals, the chance encounters here, I pull out the dandoesdeals.com commercial competency cube with the 6 different core roles. And in every single episode, I go through all 6 phases just to make sure that you can, one, express yourself efficiently and effectively on the topic of commercial real estate, but also so you can know where my guest fits into these deals. So if you want your own copy, dandoesdeals.com has it. And I do one thing that's a really, really bad idea, which is I don't even ask for your email address or anything like that. You can just go there and print it out. And I want you to do that so that you can practice talking about this stuff to your friends and family, because I really think that if you're going to have success in this field, being able to express yourself effectively is going to be the most important factor. So let's go through all 6. The first one I want to talk about is a repositioner. A repositioner does a bunch of paperwork and they're looking at a bunch of different properties because they are an acquisitions person. But I call them repositioners specifically because there are a couple things that are going on that they're doing that's a little bit special. One is, what are they doing with this paperwork? Well, there's a fancy word for it. They underwrite the deal, which means they do the arithmetic, they do the math. They find out, first of all, is this property even making the amount of money that the broker and seller are claiming that it does? And on top of that, the repositioning part of being a repositioner means that they're trying to figure out how can they make a change or two in order to find more upside in this property. And there are 3 main tools in their tool belt to pull that off. First one is, if you get more advantageous lending from your financiers, in other words, the banks and lenders and stuff like that, then you've automatically got upside because your cost to operate is lower. But let's assume that that's not on the table. The first place the repositioner is going to look is in the operations. Say, how can we get fewer of these Benjamins going down these toilets here? But of course, there's more to multifamily and commercial real estate than unclogging toilets. Ferd's on the mobile home park, so it's more on the inside of their own unit, so you don't have to worry about that stuff. But in general, multifamily, they're looking at this to find out, like, where can we cut costs? But there's more to operations than just unclogging toilets and mowing lawns. Like one of them that is one of my fortes is the marketing side, and that helps keep the vacancy rate super duper low, and then also automations with CRMs and all that kind of stuff. But let's assume assume that operations are not going to find enough upside, because after all, commercial real estate is very competitive. The next place that the repositioner is going to be looking for upside is the contractor team. They're going to get a team in there to do a value add or renovations to make units nicer, make the place nicer, and then that way the next tenants will be happy to pay more in rent than the previous ones. But of course, spending money on contractors and materials, that's really, really expensive, and it's an easy way to make your deal go upside down. So one thing that repositioner might need, especially if they're like me, I don't know if you know this about me, but I'm from the internet, and so I always need a local. I need boots on the ground, somebody who can be there in an hour or so, because that's not going to be me. I'll still be stuck at the airport. But if you have this entire team as an ownership team, and you turn around to the financier and say, hey, I want to pick up this property, it's worth tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend me, do you? Well, the financier is going to have one big question on their mind that I haven't answered yet, which is, who's the sponsor? Who's the KP? Who's the person who already owns a similar asset? Now, a lot of coaching programs, they kind of gloss over that part. But the thing that's really important is that if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset, or else the answer is just plain no. Even if you're Elon Musk or Jeff Bezos, you'd have to come up with the money between you and your friends. So so you have to have somebody in the fold who owns a similar asset. On top of that, you need a certain amount of liquidity amongst the team, and then you also need a balance sheet amongst the team of at least the amount of the loan. Some people say it's like $1 more or whatever, but if you have all of those different pieces, you've got yourself a commercial real estate deal. So Ferd, you've got a lot of fingers in a lot of pies. You probably have more of these faces covered with your organization than most, but what are the core competencies that you and your organization contribute to the deals?
Combination of those, I'd say we don't really do finance here. We'll have a bank, we'll have different portions of the capital stack, like equity providers, in particular around a syndication. Sometimes we don't syndicate; we just use our own capital, the principals. But I'd say our main core competency be as the sponsor, and then we'll hire contractors and local folks and all that. But as a sponsor, kind of Sherpa the whole deal. Like you said, you have to have a strong balance sheet or find somebody that does. So we really try to just be a good borrower, and then we can get advantageous terms. And one bank, a local bank that I grew up with, I'm one of their biggest clients. I can put a loan application in on Friday, and I know by Tuesday afternoon I'll have a loan approval. So I can be more aggressive on the acquisition, on due diligence timelines. But then also from a legal standpoint, we can put significant outs in the contract as far as tolling of inspection period, conditions precedent to closing, reps, warranties, indemnifications from the seller, and so on. So try to use a combination of them, lawyer plus sponsor plus, ability to operate team. It's not just me, obviously. We got about 30 people here that all do different pieces of the deal or a number of deals at the same time.
Beautiful, beautiful. So then let's get on to the ideal property for you, which is a little bit different. Usually in these episodes, we're talking to multifamily people. So we're talking traditional apartment complexes and things like that. So it'll be a little bit different. But when commercial investors or syndicators are talking to each other and saying, what's your ideal property? What's easier to say yes to, more difficult to say no to? There's really three main parts. First one's geography. Okay, so that's which states, possibly which counties, possibly which neighborhoods. Okay, and when you're talking about mobile home parks, it's the same as like self-storage and a bunch of other things. You're really talking about the amount of traffic that it goes right nearby, but that's really the geography piece. Second one has to do with the size of the deal, okay? And in multifamily, that's usually unit count. In mobile homes, that's usually the number of pads. Usually with mobile home parks, you want to have room to expand when you're making a new acquisition, but that size of the deal is going to be very important because it's a different deal taking down a 15 unit deal from a 500 unit deal. So the size definitely matters. The third one though, that's called class. And unfortunately they use the exact same word for two different things. The first one, especially if you're talking about buildings, it has to do with the age of the building, like the condition overall. So is it old and beat up, or is it like at least up to date, or is it actually luxurious with all the amenities and all that kind of stuff? So that's one version of class. The other version of class class has to do with where the property is located, and that'll have to do with, the crime rates and the school zones and stuff like that. Mobile home parks, I imagine that that's a little bit different, but there's still families involved. But both of those two different versions of class, they use the same system as in grade school to rank them. So it's like A plus, A minus, B plus, and so on. So Ferd, what do you guys generally like? What's in your sweet spot?
Yeah, I mean, we'd like to buy all of the above. We'd like to buy the A properties. In mobile home parks, they do it more by stars. A 4-star is better than a 3-star, better than a 2-star. But the A properties are going to be really cost competitive on cap rates. We typically will get priced out on those by private equity groups or REITs that are, buying institutional grade. So we try to go for maybe B minus that can be improved to like A minus. So ideally, 50 spaces or more. I like them to be between 60 and 80% occupied because there's a lot of natural infillability and ability to increase occupancy, which obviously can increase NOI. As you increase occupancy, you can afford to amenitize it better, and then you can have just a general aesthetic better neighborhood, which will lower your cap rate. So you can really add value in more ways than one. Ideally, I'm in the Midwest, so I'm in 5 or 6 states that I'm generally looking at. Missouri, Iowa, Illinois, Kansas, Nebraska, Indiana, those kind of be the 6 that we're targeting. And if you get over 50 spaces, ideally you're in a market with at least 50,000 people, maybe 100,000 plus be ideal. That's going to influence the market rents generally. Bigger city, better locations, going to be higher rents. Ideally, the loan size is at least $1 million because then you can get non-recourse Fannie Mae or Freddie Mac debt. But it doesn't have to be that big at purchase, as long as it's got the ability to get there at refinance. So like last year, I had 3 deals that I bought on recourse loans. You got to get them over 80% occupancy, get the value up, and then you can refinance them on a non-recourse agency lender.
Beautiful, beautiful. So then my next question has to do with who you're best suited to help. And one of my favorite things about commercial real estate is because it's multifaceted. You've got these different roles here. People are so helpful. They're so eager to help you build your teams. But at the same time, because we all have our own unique skill sets, we're better suited to help some people more than others. So in general, I'm always more eager to find the sponsor KPs just because of my marketing background and the CRM automation side. So these guys, they actually have enough of a foundation to really have my skill set make a huge difference. Whereas when you're first getting started, you really need grunts who can do 80 to 120 hours per week of just grinding it out. But as far as your organization goes, Ferd, I take it you probably do mostly 506Cs instead of 506Bs. So sometimes I have to remind people, don't entice investors if you have a 506B raise going on. But as far as you go, who are you disproportionately well suited to help?
We're good at helping sponsors from a legal standpoint, as far as everything from the transaction. And if we're doing their syndication, most of our PPMs will be under 506C, but we're working on a 506B right now, the $9.5 million raise, which is a pretty good size for a 506B.
Mm-hmm.
I think it's the biggest 506B I've done. And then that's on the law side. On the operator side, as a sponsor, we're best suited to help limited partners.
All right, beautiful.
Looking for passive income.
Right. Perfect. So, and then as far as the ways to reach out, LinkedIn is a great way to meet me. That's where I found you. My last name's nice and distinct, so I'm easy to find. This QR code, if you scan this with your phone, that goes to the FAQ page of 506BME, which is where I offer the Chief Compliance Officer services for as little as $497 a year if you're a syndicator, so you can check that out. But Ferd, if people want to reach you, is LinkedIn the best way, or is there a website or phone or email or something that's better?
LinkedIn's, you can find me there. My website's themobilehomelawyer.com or mhplawfirm.com. My syndication operation company is thirdivproperties.com. You can find me any of the above. I mean, you Google mobile home park lawyer, I'm the first guy that shows up. You can find me pretty easily.
Yep, excellent. And then the last thing I have, it's actually not for you, Ferd, it's for you in the audience, which is if you've been watching this episode, it's kind of like a public service announcement. If you've been watching and you've been noticing you have like migraine like symptoms, like searing in your eyeballs. It's probably because under my left hand there's this big ugly red button that says subscribe on it, and you should really get rid of that awful button. It's totally free to hit the button, and all it really does is it means that my videos might show up in your list of suggestions. But of course the biggest reason why I plug it is because YouTube might actually start paying for these videos instead of me, and so that'd be really awesome, right? But honestly, you can go ahead and ignore that list of suggestions, my other videos. I just appreciate the fact that you spent this time with me, just like Ferd. It's been a long time coming, but I'm glad to have had the chance to sit down and get to know you a little bit better. Thanks for joining me.
Thanks for having me.
Awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.